Hello traders and welcome to another video review. Today is Wednesday, 28th of April 2021. Let's take a look at the Forex calendar because it looks like we have a busy day today. Important data published overnight. Consumer price index from Australia worse than expected. 0.6% versus 0.9%, so there is no inflationary pressure in Australia. The trimmed mean CPI and weighted median were both worse than expected as well, so we will definitely take a look on the Australian dollar. During the London session, we don't have much data to be published, important data. We got the GfK consumer climate from Germany. We got some ZEW survey from Switzerland, and that's about it, but those are not that much important for the traders. But during the New York session, we have plenty of data, we got the main event of the day. So 1:30 retail sales from Canada, and then goods trade balance from the US. We got the wholesale inventories, and then at 3:30 crude oil inventories. Good news for all of you oil traders. We will have some inventories data published today, and then of course 7 o'clock the interest rate decision from Fed statement, and 7:30 press conference. So let's take a look at the Australian dollar first, and then we will take a look definitely on euro and on the dollar. What is going on the Australian dollar at the daily time frame chart? What do we have here is developing, maybe even not developing, but failed head and shoulders pattern. We got the move up towards the technical resistance 7,822. As you can see, it's a kind of a strong resistance, tested twice. Nothing happened, no breakout, no violation, so the market goes back down again. A very nice test of this supposed to be neckline here, so we will just because it works, so we will extend it. So any breakup lower below the neckline after the rejection of a rally at 7,822 pips will target one of the Fibonacci retracement levels. 7,675 is 50% and 7,642 is 61%. Of course, the lows, let me just copy one line. The lows are much more further away because the recent low from the beginning of the April is at 7,533, which is this pin bar here. So looks very promising for bears after this two attempts to break out higher. So maybe this market will break to the downside soon. The momentum is still just above the level of 52, 53 points. So any breakout below the neckline would mean that the momentum will be negative and the bears will be in control of the market. So key right now for the market, for the traders, is to keep an eye on the current development and the market reaction around the blue supposed to be neckline. Euro dollar is very important to keep an eye on because we got this data today, right, to be published from the US, and of course the interest rate decision from the Fed. So right now we are still inside of this channel, but this bounce here might be only temporary bounce. A counter short term is downtrend. The short term trend is down, but this is only ABC correction in terms of the yield wave. So the current developings here might be a counter short term trend bounce, right? And if market will not deliver, the traders might sell the euro and buy the US dollar, and that would mean the euro would fall out of this channel, and then of course test the 1.1933 technical support. If this level is violated, then we will likely go much more lower than 1.1952. We might go as low as 1.1831. It depends on the market reaction. However, on the other hand, if the Fed will deliver and people will start to buy the euro, of course, the next target is 1.22, which is the next immediate technical resistance level for the bulls, and the other one is 1.22. 47, which is the high of the wave B here. So those two levels are kind of important in the short term on the euro dollar. Please notice we are trading just below the extremely overbought market condition. The RSI is still 61, so it's strong, it's positive, the sentiment is still bullish, but I guess there will be very limited volatility before the FOMC interest rate decision, and then of course maybe if the market will get caught by surprise, the volatility will increase and we will have some will trigger some move on the euro to dollar. The other thing, the other pair that will react is US dollar to the US dollar and the CAD, because we got some CAD data as well, Canadian dollar. So rejection on the daily time frame chart, multiple rejection on the daily time frame chart. None of the targets, like 100% target, had been hit, so we can remove this one. Very similar to moves up, 221%, 228%, and as you can see, big reversal after 1, 2, 3, 4, 5, 6, 7 attempts to break above 1.2330. Finally, the traders that have a bearish sentiment had started to sell. Big bearish engulfment here. And then of course we are going lower and lower towards the lows of in the middle of the March 2021. So if we will hit 1.2366, that would be again lower low. And please take a look at this trend. This trend is still down we go. So people are selling the US dollar, buying the US CAD. The next target in the larger time frame is 1.2244. This is the key technical support for the market. So if we will break the level of lows of the 18th of the March, 1.2366, this is the next target, and this scenario is valid as long as the level of 1.2630 is not apparently violated. We can even move right now our technical resistance, adjust to the newest data. 1.2647 is the new technical resistance right now. Okay, there you go. This is it. So very interesting market reaction on the bearish engulfing pattern. Let's take a look at the last thing, gold. Why we are looking at the gold? Because of the interest rate decision. So what is going on here? 1806 has not been hit. As you can see, the market is reversing slightly and testing 1766, 1760. This is that zone. This is the technical support. Both levels are technical supports for the bulls, and as you can see, breakout will be definitely a bearish development, because the price will be out of the channel and below the technical support, which will definitely mean that this is the 52 points on the RSI, so we will be below the level of 50 or on the level of 50, which is the neutral level, and very close to the, of course, the neutral zone below the level of 50. On the momentum, that would mean that the bears will be in charge of market again. So please keep an eye on market reaction on the during the FOMC interest rate decision and press conference, because we might have some slide lower towards first 1723, and then of course only the lows at 1677 are next, right? So we might hit again 61% of the Fibonacci retracement, but this retracement is no longer that much important for the traders, because it's been hit already twice in the end of the March and in the beginning of the March. So the much more important levels are this one, 1766, 1760, those two here, and those technical supports at 1723. So that's everything for me just before the FOMC interest rate announcement. Please keep an eye on the current developments, and we will see how it will go tomorrow with the American dollar, of course, and maybe we will take a look at the American indices, okay, after the interest rate decision. So happy trading, thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.